Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? They're still making new highs, right? New highs in the S&P, new highs in the Dow. Not a new high in the NASDAQ. I'm hoping the NASDAQ can make a double top. That's where I'm looking to short the market at. Now, I get a lot of questions and they say, but Mike, why would you short this market? This market, it's impossible for it to ever go down because the Fed, they'll just print more money and make it going up. Obviously, the comment came from a younger gentleman. He's never seen a bear market, and that's fine. He thinks it's just going to keep going up forever. And it's a possibility, right? Most moon boys are of the younger generation where they have not seen a down market. They've only seen markets go up. If they've been trading less than 16 years, they've only seen an up market. Very fascinating to me. Bear markets used to be really common. Now they do try to paper over it. And I do agree the Federal Reserve, they're going to come out and they're going to try to print money. Now, I think there's going to be a good opportunity to short this market. I think this market could come in easy 20, 25%. If we get the big crash, you're looking at 80%. But they will try to paper over it with the printing of money. I agree with that 100%. Now, maybe the S&P, maybe it makes it to 6,000, right? That's probably a good entry point on the downside. But people, the moon boys, they think it's keep going up, keep going up, keep going up. And so far, they've been at 100% right? But if I say I'm going to bet the market to go higher, half of the people that watch my show probably disagree with that. If I say I bet that the market's going to go down, half the people disagree with that. There should be 50% of the people on each side. That's what makes a market. That's why there's a market price. But eventually it gets lopsided to one side or the other, and I think it's going to start to get lopsided to the downward side. This is just my take, but I'll be looking for a double top in the NASDAQ. I'm not short yet, but I'm planning to get short. I do think this market's going to have a big move to the downside. I think that big move is coming. Just my take. Now we got gold. Gold keeps going up, right? But it's screaming at us. I was hoping that gold would pull back to 2,500. I really want to get some more. Gold's the number one performing asset this year, right? Up about 40%, keeps screaming higher. But what's it screaming at us? What is it telling us? It's telling us that inflation is not dead. It's telling us that the moon boys are correct. They're going to print money into oblivion. They're going to print money and try to keep everything propped up. And you're going to see gold going to the moon. I am a moon boy when it comes to gold, but that's just me. I'm an old timer, and I know that gold's going to outperform everything right now. Every time you just print money, gold's going to outperform the stock market. It's been outperforming the stock market for the last 20 years. Dow in the last 20 years has gone up 4 times. Was it 10,000 20 years ago? Now it's at 40,000, went up 4 times. Gold in the same period went up 8 times. It outperformed the Dow 2 to 1, right? And it's still gold is still cheap compared to the Dow. I do think they'll get to be 1 to 1 at some point. That's just my take. Now, okay, let's get over to another topic I want to talk about today, and that is, can zombies fly? Can zombies fly? I'm not sure if they can or cannot. But anyways, Boeing is becoming the next zombie company. Boeing used to be the darling, right? Everybody owned Boeing. Boeing was a major player of the Dow Jones, right? It was one of the big top traded stocks in the Dow Jones. But Boeing is now becoming a zombie company. What is a zombie company? A zombie company is a company that doesn't bring in enough cash flow to even pay the interest on their debt. So their debt is being cut to junk. $52 billion in debt is going to be cut to junk. Junk debt, meaning that it's no longer investment grade. It's no longer investable for pension funds, for institutions. You see, this is a zombie company. A lot of zombies are going to be falling now. No pun intended, but Boeing, a lot of their airplanes have been falling, right? And that's why they're becoming a junk company, right? That's why they're becoming a zombie. Their debt's being reduced to junk. Do you realize in the S&P 500, out of the 500 stocks, 20% of them are actually basically zombie stocks. Now, zombie stocks, they have to keep borrowing money just to stay in business, right? They don't make enough money to pay the interest on their debt, so they have to borrow money, and they have to borrow money again and again and again and again. A lot of these companies are going to go out of business. Now, will 20% of the S&P 500 go out of business? Very possible. That would be 100 companies of the S&P 500 would pretty much make it to S&P 400 if you got rid of the zombie companies, the ones that don't bring in enough cash flow to pay the interest on their debt. Forget about Boeing paying off the $52 billion. They're not bringing in the cash flow just to pay the interest on the debt. You know, we live in a zombie country, right? We don't bring in enough cash flow to pay the interest on our debt. Technically, we do bring in enough cash flow, but we don't have the money because we spend it on everything else, and therefore we have to print the money to pay the interest on the debt. We're kind of a zombie company, right? But the thing is, you got these zombie companies, they're going to be falling out of the sky, right? Okay, and it's a big problem. Now, who's it a problem for, Tall Mike? Big problem for the banks, right? The banks. See, the banks are the ones that have to keep loaning them money. If the banks don't loan them money, they can't stay in business. And a lot of this corporate debt rolls over. It's not 30-year debt like you have on your house, like you have on your mortgage. It's not 30-year debt. It rolls over about every 3 to 5 years. Now, when it was 0% interest rates, the zombie companies were okay. They just go, hey, I'll take some more of that 0% money. They give them more 0% money, and they keep their bad business model in place, losing money hand over fist, right? They aren't making any money. They're losing money, and they can't bring in any cash flow, so they have to keep borrowing money. But the problem is these banks, now the rates are higher, right? Now they have to pay 5-6%, where before they were paying close to zero. So the banks, they're going to say, well, you got to pay 6% now. And the zombie company, they couldn't afford it at zero, right? But they now have to pay 6%. A lot of them are going to go out of business. What's that mean? A lot of jobs are going to be lost. A lot of jobs in the zombie companies. A lot of people work for those companies. But these companies are going to go away. Big problem for the banks because they're not going to get paid back on that debt, right? They got a lot of debt in there, and they're not going to get paid back when they go bankrupt, right? People are going to lose their job. People are going to default on the mortgages. Who holds the mortgages? Banks hold the mortgages, not going to get paid back. What's another big problem for the bank? Credit card loans. Credit card loans, right? $1.3 trillion. That's a record high, by the way. Now, it's fascinating that we've reached a record high in credit card debt at the same time that the interest rate on credit cards is a record high, averaging about 24%. 24% people are paying on $1.3 trillion. That's a lot of money, right? So here's the problem. They can't pay. What's happening? Defaults. Defaults are spiking up. About 10% of credit cards now are in default. Banks are losing money. They're not getting paid on the credit card loans, right? They're not getting paid when these corporations roll over their debt and the corporations go out of business, just the zombie corporations. They're not going to get paid on that. What else do they got? Well, they got that commercial real estate stuff. Oh my goodness, that's underwater, right? I mean, these properties, they were $100 million. Now they're $50 million, but they owe $70 million. They got to bring 20 million in or to give the keys back, right? So the banks are hurting again. Now, JP Morgan, they just came out. They had a little bit of a loss, but their trading profits were booming. Why are their trading profits booming? Because Jerome says, get in the stock market. Get in the stock market. It's going to go higher. Going to go higher. Buy gold. Buy commodities. Going to go higher. So Jerome gives them the little tips, right? And they trade, and they make a lot of money trading, but they're losing so much money on the other side of the businesses. They actually have to mark their losses down. It's called mark to market. If they had to mark their losses down to the market right now, they would all be insolvent. The banks would all be out of business. Now, banks are going to start to fail. They're going to start to fail like you've never seen banks fail. They're going to be falling over like dominoes, right? Now, we had the failures. That was last year, right? The Silicon Valley Bank and all those. But everybody thinks it's done. You don't hear people talking about the bank failures. I'm telling you, they're going to fall over like dominoes. And you're probably not going to get your money out of the banks at that time because they're not going to do a bailout this time. They're going to do a bail-in. You see, you're going to be the one bailing the banks out if you have money in the banks. I tell people, only leave the amount of money in the banks that you're willing to lose, right? And only buy real money, gold and silver, with the money you want to protect, right? Because that's going to keep going up, right? Even when the banks fall, people are going to be rushing to the gold and silver. That's just my take. A lot of people think gold and silver will crash with the banking system, and maybe it will, maybe it won't. My take, my argument is that it's a sovereign debt crisis and that gold is going to be the last man standing. We'll see how that plays out. We'll see if I'm right on that. But the banking system has losses right now that dwarf 2008. Their losses are huge. Their losses in commercial property, commercial paper. You see what happened to Silicon Valley Bank. Well, they bought all the bonds, right? They had a lot of bonds, and when bonds were at 0%, they were getting 0.25 or something on the bond, but then all of a sudden went up to 5%. Well, when interest rates go up, the bonds collapse, right? So the bonds collapse and they didn't have any money. Well, here was the problem. That's all fine. They could have just held on to the bonds. Like a lot of banks, they have the same problem. They got these bonds, but they're going to hold on to them for 20, 30 years until they mature. Now that's great as long as nobody wants their money back. Once you get a run on the bank, like what happened to Silicon Valley Bank, people realize they don't have the money. In other words, the emperor's not wearing any clothes, and everybody went in to get their money out, and they didn't have the money, had to shut the bank down, right? It's a failed bank. FDIC came in, bailed everybody out. Problem was a lot of these people weren't insured, but they didn't want a banking crash right then, so they bailed everybody out. But now the FDIC doesn't have any money. When your bank goes down, they don't have the money to bail you out. So what happens? Well, they're going to do a bailing. But Mike, I'm insured for up to $250,000 by the FDIC. That's great, but the FDIC doesn't have the money. So, Grant, I agree they're going to print the money, but it could take you 6 months to a year before you see your money back, right? That's just my take. Maybe they're going to just do it the next day. I don't think they're going to do it the next day. I think they're going to be bailings. Bailings like Europe had. Bailings like Greece has had. There's other countries around the world where they bailed out the banks. The bail in to bail them out. That's going to happen here in the United States. Once again, that's just my take. But here's the thing. The other countries around the world, their central bankers, what are they doing? Well, they're buying the gold. They're buying the gold. They're getting into the gold, right? Because they see the dollar crashing and they see gold skyrocketing, gold screaming, buy me, buy me, buy me. People go, I can't buy it here, Tall Mike. It's too expensive. It's at a record high. Look, it's going double, triple, quadruple from here. You're going to see gold hit over 10,000. That's the direction it's headed, and it's going to go in that direction as long as we continue to print the money, right? Now, if we ever stop printing the money and say we're going to be financially responsible, we're going to pay off our debt, I'm going to be selling all my gold. But I promise you that day's never going to come in the United States. Now, it's going to come where we get back to sound money, where we get back to gold and silver as money, right? They're going to have to do that. Why? Because all confidence is going to be lost in the dollar. The dollar is going to go to zero. Nobody's going to have confidence in it because it's just paper. It costs the same 3 cents to print a dollar bill as it does to print the $100 bill. It costs 3 cents to print a $100 bill, and they're both worth about 3 cents. Well, actually, they're not even worth that because that's just paper, right? And you can get cheaper paper. You don't need the ink on it. It doesn't mean anything. Okay, so anyways, the dollar's going to go to zero. Gold's going to take off 10,000, and the countries around the world, their central banks, they're buying the gold, right? You got to do what the central banks are doing. Now, they're telling you to stay in the dollar. They're telling you to buy the government bonds. Stay in that stock market. Stay in that stock market. It can only go up. Look at you young people. You've only seen it go up. But the stock market can and will go down. Yes, maybe I'm an idiot because I'm going to be shorting it. Not yet. Not yet. I'm looking for a double top in the NASDAQ. I'd love to see 6,000 on the S&P. I think those would be both good entry points for a short. And then as it drops below its moving averages, I add to it. You see, you start really small with the short position is what you do. Now, shorting's not for most people. I don't recommend it for most people. You have to be a gambler because it is gambling when you short a market. It's very hard to time the market. You start really small and you layer into it. That's how you short if you want to go that route. That's what I'm doing. You do what you want to do. I'm going to do that when it gets up to those levels. Okay. And what else am I doing? I'm buying gold. I'm buying silver. That's been the best trade of the year. I'm having one of the best years I've ever had trading because I own the mining stocks. I own the gold and silver. These are the things that are outperforming. Why are they outperforming? Because we're printing money into oblivion and money's going to go to zero. This is just my take. If you like this stuff, give me the thumbs up. Why not? I'm Tall Mike. Punch that subscribe button. Get out there, everybody. Enjoy the day. We'll talk again real soon. Bye-bye now.